Okay, so welcome to okay, I want to welcome everybody to the live simulation. This is our third day together in the mentorship for May 2023. And we're going to, a lot of people call it backtesting. I call it live simulation because of the platform we're using. We can actually see the Forex market move live and take trades. Backtesting because it's actually past price history that's moving, but it's really good. We're utilizing FX replay here. It's one of my favorites. I really enjoy it. I think it's very beneficial. So what's special about live simulations and this sort of backtesting is that with just a few hours of backtesting via FX replay or live simulators, there's others out there, it's equivalent to 6 months of trading a demo account. So it's very, very beneficial. And it's just a matter of leveraging it the right way to learn and grow from your experience and seeing things that would probably take you weeks or months to see in the market, but you get to see it in one sitting of these sessions. So we're going to create a session here. And we're going to use a 100K account. The reason is because in Forex, unlike trading crypto or stocks, you can be a funded trader. And quite oftentimes people are seeking out these 100K accounts. So if you develop the skill set, you'll have people that will fund you to trade their capital, these prop firms. Let's look at gold. So we'll do a live gold simulation. And let's choose, I'll let you guys choose. Give me a year. Maybe you want 2020, 2021, 22, 23.
22.
22. Okay, give me a month.
April.
April. Okay. And we'll start from a Monday. But let me switch the time first. Actually, let's just focus on New York session, because not even just starting out, but when you're trading, it's better to focus on one session, taking 1 or 2 trades that session, and then calling it a day. You don't want to be people that are over trading. So we got this from April 4th, 2022 till April 5th. Sorry, May 4th, 2022. So it's a month. We'll probably just trade that week, focusing solely on New York session. So let's save. Okay, we can look at this account here and we can see that it's a fresh new account. There's been 0 trades, not enough trades. The session does not have enough data to view analytics. Please go back, test a little more and come back. So it's a fresh new account.
Wait, bro, 1 second. When you do it, this is a website you're on right now?
Yeah. It's a web app. I'll send I'll share more information about this. So okay. This is a previous chart, me back testing. All right, so right now, if we look at the time, it is Sunday, 3rd of April. If you look down here at the bottom, you like right here when you hover, you can see that Sunday, April 2022. So let's go forward to our specific time frame. And then we're on the New York time frame right here, UTC -4. So that's New York. So let's go to 6 a.m. that Monday. Okay, so this is 6 a.m. We're going to go to 6:30. So now it's 6:30 a.m. that Monday. Now let's do our top-down analysis by looking at the daily first. Okay, so looking at the daily, price is just in this range right here, right? This is a daily support. These candles couldn't close below the support, wicks, right? The current daily candle is currently bullish, but it looks like it's bouncing off of this downtrend right here, right? If we see this trend right here, looks like price is making lower highs. So we have a, oh, what's going on? Sorry. I just want to show you guys what's going on here with price. So we have a high here. What is going on with my draw tool? 1 second. Oh, it's not working. That's weird. Anyway, let me use another draw tool here. So, and it would be white. Okay. We have a high up here. We have a lower high here and a lower high here. So price is making these lower highs, right? And I think I know what happened with my other draw tool. The color was white. Okay. Cool. So, like I said, price is making these lower highs, and it looks like it's finding support right here. Made this high, lower high, lower high, finding the support here. These candles could not close below. So it's a strong support right here. So it's very likely that this daily also can't close below. And it looks like price was bouncing off of this uptrend, made this pullback to potentially drive back up. It's not our bias. It's just what we're observing at the moment. In order to get our bias, we have to, so let me just back up for 1 second. So right now, we don't know if price is going to go down or go up by looking at the daily candle. We're looking at the daily candle, and we're still uncertain if price is going to continue going, if price is going to continue going down or is going to continue going up. So we need to go deeper into the daily by looking at the 4-hour. Now, looking at the 4-hour, keeping in mind that the daily is currently bullish, and this 4-hour, the daily is currently bullish, and this 4-hour right here is currently bearish. And this is our daily support. So all that we know is that we currently have a 4-hour resistance that's looking like it might form right here. I would look to the left just about here and use this one as a resistance, because look where this wick tapped into. You can see that that was a vital place, right? It was a major level. Price rejected right here, actually closed right here, but we got the same level where body closed right here, right? So this is the 4-hour. We still have no idea if price is going to go up or down. All we know is that there's this strong daily right here, and then now there's 4-hour resistance right here. So now we look at the 1-hour. So looking at the 1-hour, we see that we have this 1-hour support here. So we adjust our 4-hour level to this 1-hour, sorry, not support, resistance. We have this 1-hour resistance right here, not too far from the 4-hour resistance. And we have this 1-hour support right here, just above that daily support, which is at the bottom of this wick. At the bottom of this wick is a daily support. We're going to adjust that daily support to this 1-hour support. Still, we're uncertain if price is going to go down or go up, but we only need a portion of that move. So we don't need anything too crazy. So now let's go over to the 30 minutes, get a better idea. Okay, so now we have a better idea. We see that 30-minute resistance is the same as the 1-hour. Current 30-minute is bullish. The previous 1-hour was also bullish, and we said the 4-hour is bearish, right? So the 30-minute is bullish, the 1-hour is bullish. if this 30-minute closes here to create a support, I'll be teaching you guys about, what do you call this? Impulse entries. Normally, I like to shy away from it, but it's very vital that you guys know it to identify it, and then you'll be able to decide if you want to take an entry on the impulse entry. So the reason I say that is because if we look right here, on the 30-minute, we have this bullish movement to the upside, and then this potential pullback. If price forms support with the closure of this 30-minute candle, the next candle could break that high and continue driving up. And that might be our first trade for this session. So this is a 30-minute, and we have a potential 30-minute support forming right here. Looking at the 1 hour again, we see that that bullish movement occurred. It broke this structure right here to the left. It closed above this resistance right here, which means price could continue driving up. So now you see how at first with the daily candle, we didn't have a bias. We just knew that there was this daily support being respected. But when we went into the 4 hour, we still didn't necessarily have a bias. And then we went into the 1 hour, we started to develop this idea that we have. Now looking at, because we go back to the 1 hour, right? We see that the 1 hour left this resistance right here, right? But then this 1 hour candle was able to break and close above that resistance, which means that it broke this structure. And now this resistance is acting as a support with this bearish candle, 1 hour candle right here. So if we can get this 30-minute closure to close right here, the next candle potentially could drive up, and that would probably look something like this. Let me show you. The next candle might open up right here. It may form a bottom wick, something like that. And then it may drive up after it breaks this high and then continue to fill this range. And that would be our trade. So now that we have this bias, again, coming from the daily where we had no bias, now we form this bias by top-down analysis. And so potential buys in this zone with the break of this high for an impulse entry to continue driving up into the range. And what else will support our bias? The other thing that's going to support our bias is the time. This is pre-New York, right? It's 6:30 a.m. Normally in pre-New York, pre-London, London session. And this is also still overlapping London session. So we got volume from London session. You got volume potentially kicking in from pre-New York, because the largest financial market in the world is Wall Street, New York Stock Exchange, right? So you're going to have the most volume in financial markets in the world during pre-New York and New York Open, which is 8 a.m. for Forex. And then you have shortly after that, you have New York Stock Exchange. And then around 8:20, you also have the Chicago Mercantile Exchange. And you'll see a lot of movement around 8:20 for gold specifically. So cool. So now we have this bias for buys. However, since there is clean traffic right here to the left-hand side below, so if we get a price, if we get price to close below here, we got potential sales filling this range here as well. So that's how we can potentially have two biases. Awesome. So let's start the live simulation by clicking here. So in the live simulation, each candle in live simulation minutes, each second will represent a minute. So we just look at the time at 6:30. At 6:30, we'll have a 30-minute closure. This will close. If it continues bullish, we can look at potential buys. So let's start. We got a problem here. The problem is we're on the 1 hour. So let's switch over to the 30-minute. So it's doing exactly what I said. So if this candle can break this high, I want to take these buys up. So I'm going to put a position for a buy stop right above here. The stop loss will be at the low of the previous 30-minute candle. And our target would be this wick top to the left here. I'm going to risk 2% on this with a buy stop. So the buy stop means that if we pass this level right here, which is right above this candle, then we're activated. And then we'll manage risk if we get activated. So it's just driving broke the high, it activated us. It broke the high, activated us, and let's see if she drives. Okay, she's driving. So now that she's driving like this, I want to make this a risk-free trade. So now we're risk-free. Because now, if we look, we've already acquired 10 pips. So now I'm going to close 50% of the position. I'm going to save that. So now we secured 50% of our profits. This should be risk-free. I don't know why it didn't go up. But now we're at break even. We already secured 50% of our profits. And so now we're going to see if she continues to drive. It's 6:54 a.m., almost 7. We're about to get a 7 p.m. closure. Okay, we got a 7 p.m. closure, right? I mean, 7 a.m. closure. So we got an hourly closure above here. This one is probably going to create a bottom wick. It might take us out, but we already got a winning trade, but we also have potential buys again, right above here. Our stop loss would be, I don't like how big the stop loss is, but let's see. It's not that bad. Potential for this, only risking 5%. If we get activated, then we got a second trade on. We have our second trade for this idea. Okay, now we are activated. Okay. We got to see if she drives. We're risking 5% on this trade, 0.5%. Okay, she's driving a little bit. Okay, now she drove. So now we want to make this risk-free. So now we go break even for this trade. Now it's also risk-free. We got 2 trades, one that's already running risk-free, both running risk-free. We're going to take 50% off of this one. And then for our previous trade, I think we'll move our stop loss to the entry of our new trade. So now we have everything risk-free and we already secured some profits. And we have 2 trades running. So let's see if she continues to drive or she rejects. Okay, so now I'm going to take everything off the table because I don't like that she didn't just move quickly. So closing this 100% and I'm closing this other one at 100%. Cool. And now we can just watch it. We're out of the trade. Oh yeah. Okay. So we're out of the trade. So now we can just watch it and see where she runs. Beautiful. And we would have got stopped out. Awesome. So we're done for today. Well, let me see. We should just be done for today. We should go to the next day now. But let's look at what we accomplished. So we made 1,800 on this trade. And we made $200 on this trade, bringing the account already up to 2%. Sweet. This is all pre-New York still at the moment. Pre-New York. So let's take a second to ask ourselves, what was this setup? This setup we call a wick fill, right? We look at the 4-hour. Well, we can't even see it now because it already filled this wick. So anyway, price came up, pulled back, right? Let me just draw it out for you. Price came up and then it pulled back and then it created this bullish candle. So when it created this bullish candle, we waited for the next candle to create a bottom wick. On the break of that candle to continue driving up, then we just followed the trend, right? Because we see that price was trending bullish from down here. Price was trending bullish all the way from down here, going all the way up, making this pullback, finding support. It formed this support with this bullish closure. Now it's a support form. Why is that? Because after we have a bullish candle after a bearish candle, a closed bullish candle after a bearish candle is support. That's support. And a closed bearish candle after a bullish candle is resistance, right? We got this bullish candle that closed. We got this bearish candle that closed. So that was resistance formed. So let's just continue, see if there's anything during New York Open. It's breaking up, it's respecting this low.
You said close bullish candle is after a bearish candle is a support.
Yeah, a support is formed. So you see this bearish candle is red and this bullish candle turquoise green. So this bearish candle close, this bullish candle close, it created a support right here. Right here also, this bearish candle close, this bullish candle's close, it formed a support. Good question. So this candle respected the low of the previous candle, could continue, potentially could continue driving up. So now look at this. Now we have this resistance formed, but look at the time. Look at the time. It's 8 a.m. So even though we have this resistance right here, who knows what could potentially break that resistance? Any ideas? Volume, because New York Open is about to occur. It's 8 a.m., right? So that's the currency market. Potential volume could allow price to break through this resistance. But before we do anything further, we want to take a look at our situation in the market. So let's go back to the daily. The daily is still bullish, bouncing off this daily support, potentially to come up and retest this high up here. The 4 hour should be currently bullish now. The 4 hour is still bearish, but if it get a closure above here, that means the 4 hour becomes bullish, potential to continue driving up. The 1 hour has a weak bullish closure for the previous 1 hour and is currently bearish, and then the 30-minute. So let's see where price goes. Look at that volume, just like I said. So volume shot up and it broke above. You get a closure above here, that means the 4 hour just flipped, and we could potentially continue buys up to this resistance here at 1935.04, but we need a closure. And to be honest with you, she might just drive. But let's see. We got COMEX already opened, Chicago Mercantile Exchange. And now we're about to get a 30-minute closure. Okay, we got a 30-minute closure, got a small bottom wick. Yep. I think we don't want to be over traders. So let's go over to the next day. We've already conquered this day. That was Monday. If you look right here and then look up to the top here, it was Monday. So let's go over to the next day. Pre-New York for the next day. $6:30. This is 6. Switch over to 6:30. Okay, so now it's 6:30. So let's clear the chart. Let's do a new analysis. Looking at the daily. Again, daily is still just like yesterday, right here at this, respecting this daily support. Previous days running bullish with a pullback. Now just in this range. Let's look at the 4 hour, and the current daily is bearish. Let's look at the 4 hour. The 4 hour has this resistance right up here. It acted as a resistance right here, acted as support right here, and again, acting as a resistance right here. And then it also has this 4 hour support right here that looks like it's trying to close below, but we have to wait and see. Now let's look at the 1 hour. We can adjust it down to here for the 1 hour. We can bring our daily up here for the 1 hour. And sells below here would be clean traffic to the left, right? If we can get sells below this support, we got all this clean traffic to come down here. But we still don't have a bias just yet. Let's look at the daily one more time. Daily is currently bearish. 4 hour is currently bearish. The 1 hour is currently bearish. So all of our higher time frames are bearish. Looking at the 30-minute, 30-minute is also bearish. But we can only take 30-minute sales below here because why? That's also support. But most importantly, if we look at these wicks, they couldn't close below the support. So if we can get a closure below this support right here, then we could potentially drive them down. And it also aligns as a confluence with our daily, our 4 hour, and our 1 hour, which are all bearish. So now we just have to wait and see. So ideally, for this scenario, we don't have a clear bias just yet. What we do know is that if we can get a closure below here, we can take sales. If we can get a closure above here, ideally here to the left, around this area, we can look for buys. If we can get a support that's formed right here, we can consider buys. But now we just have to wait and see. 6:30 to start 30-minute closure, close bearish. Still driving down. Look at the time, 6:37, 38, 39, 40. We got about 10 simulation minutes to a 1 hour closure. Three, 2, 1. So we got a 1 hour closure. We got a support form. But the thing is, I'm not necessarily interested in taking buys when we have a daily that's bearish. We have a 4 hour that's bearish. We have a 1 hour that's bearish, that closed bearish, and we have this new 30-minute. So I'm still not interested in taking buys just yet. So we got to wait. That's a part of the game, waiting. So a form support, it broke this high in the first 30 minutes. So remember, candles have a life, right? So not the first 30 minutes, the first 15 minutes. Candles have a life. We're looking at 30-minute candles. We're basing our trades and our entries on the 30-minute candles. So that means that 30-minute candles is made up of two 15-minute candles. If the first 15-minute candle goes in one direction, the second half of the 15-minute of the 30-minute candle may go in the opposite direction. So the first 15 minutes of this 30-minute candle, it already broke this high to the left. So it may potentially just continue bearish. When you do these simulations and you trade quite often, these are things that you see reoccurring in the market. Okay, so let's continue. It's 7:10. There's a small resistance right here. About to get a 30-minute closure. It closed with a weak bearish doji. So weak bearish candle. Looking at time, we got 10 simulation minutes for a 1 hour closure. It might close below here. It closed respecting this support. Okay, now we got some movement. It's 8 a.m. Markets are open. She's driving. This is where we're interested in sales if we get a closure below. She might drive. Let's see. Oh, rejecting. Oh, beautiful. Okay. We get a closure below here. I mean, above here. That's where we're interested in these buys. It's not giving us anything. We need some confirmations. There's not even an impulse available for us. Okay, awesome. Look at this. So we got a 30-minute closure and 7 simulation 2, 1. Okay, so we got a 30-minute closure and a 1-hour closure. But now we need to relook. We need to reobserve. So the daily should be bullish. Okay, now the daily is finally bullish. So it's no longer bearish. The 4-hour should also be bullish. Okay, the 4 hours also bullish. The only issue here with the 4-hour is we have this 4-hour resistance right up here. May not necessarily be an issue because I think that's still a nice range. Yeah, about 23 pips. It's not a bad range. And then we have this 4-hour resistance up here. So now looking at the 1-hour. So we saw the daily is now bullish. The 4-hour is now bullish. And the 1-hour is now bullish. Got this 1-hour resistance right here. If you see that. Gonna remove this. Price bouncing off of that zone, this whole zone from that daily support that it's been respecting, but still in this range. We got this 1-hour resistance right here. So now looking at 30 minutes. So we confirm now the daily is now bullish, the 4-hour is now bullish, the 1-hour is now bullish. Looking at the 30-minute, it's this zone where we said we can have buys. We said we can take buys above here. Even above here is even better. Even better than that is above here. Then you got clean traffic all through here, which is going to be about 70 pips. So we got to look at the time. Check out the time. What time is it? Anybody can tell me what time it is real quick? Anyone? So look down here, it's 9 a.m. That means we got a new 4-hour closure. What do we know? We know that majority of all candles have a top and bottom wick. So what that means is potentially this 4-hour, this new 4-hour candle is going to make a bottom wick first. So we just got to wait. We just got to wait. We have to wait. So let's wait. Okay, maybe that's our bottom wick. Okay, potential buys above here. The low would be the current bottom wick. The high would be all the way up into this range here. And only in 5 pips, we're going to go break even. This is a risky trade. Not that risky, actually, but I'm only going to risk 5.5%. If we get activated, then we're in this trade. Okay, we are activated. It's rejecting, risking 0.5%. Okay, we lost that one. Only risking 0.5%. Why was it kind of risky? Because these wicks right here are all rejections. So a closure above here will be much better to fill this range up to here. We lost 0.5% for that trade, and that's okay. When our strategy already tells us that we should have just waited for this closure above here. Risky because these wicks are just rejection. Cool. Let's continue. Okay. We want to give this trade another chance. Let's see first. If we want to give this trade another chance. Okay. I think on the break of this high, I want to give this another chance for 0.5%. The current candle is the low. Let's just take it up to here. Place 0.5%. We're just giving this trade one more chance. If we lose this one, we lose 1%. But we got to get activated first. Then we're going to immediately go to break even. Okay. I want to take this to break even now. So we're activated. We didn't take any profits off. We just wanted to drive. Okay. Now we're going to close point. We're going to close 50%. So now it's risk-free. We secure some profits. Why is this down here? It should be risk-free. We secure some profits. So now let's see if she runs. We're about to get a 30-minute closure. Okay, we got a 30-minute closure. It didn't close above here, so we don't have another entry. We do not have another entry, but so let's just let it run. Guess it's running. Let's take off some more. Close full, 100%. Just close full. Cool. And I think we're going to be done for today. We don't want to overtrade. All right. So yeah, she's still running. Beautiful. So our bias was correct. Our previous stop loss was just too tight because it was the current candle's bottom, but that's fine. We still came out on top. We have one losing trade, but we made that back plus 91. So it's all good. We only risk 0.5% for that. 0.5%. All right, so let's go to the next day. This is Tuesday, so now let's go to Wednesday. And this one might, yeah, I thought it was gonna reject. Okay, 6 a.m. pre-New York for Wednesday. So now it is 5, 6. Okay, cool. So now it's 6. Let's go to 6:30. Awesome. And what do you guess we have to do? We have to do analysis. So let's come down to the daily. What's this? All right. I don't know what this is. Let me close this. Cool. All right, so looking at the daily, again, we still have this daily support down here. We have price rejecting the upside. Current daily is bullish. Daily resistance right here. Price just in this range at the moment. Look at the 4-hour. Daily is bullish. 4-hour is currently bullish. We got this 4-hour resistance right up here. And then we got this 4-hour support right down here, rejecting the daily. Let's look at the 1-hour. The 1-hour has a potential resistance right up here. If this 30-minute close is bearish, which means that price is dropping from here, ranging, pulling back, potentially drop back down if we have resistance formed right here. So potential sales to the bottom of the range. Let's look at the 30-minute before we make any decisions. Okay. 30-minute created this resistance right here. Currently breaking the previous 30-minute low. And we have this 30-minute support right down here. And then we also have a level right up here, which is a resistance looking here. So let's see. I'm not going to take an impulse on this. We're just going to wait and see. $6:30. Sells below here would be nice. Ten simulation minutes for a 1-hour closure. Okay, look at this. Look at this. Beautiful. Beautiful. We got this 1-hour closure. Look at the 1-hour, bearish. 4-hour, bearish. Daily, bearish. And our current candle has no bottom wick. So actually, the stops will be huge, but let's take a look first. Yeah, the stops are massive. We would need this to create a top wick that's much taller. Maybe up here to use current candle as a stop. But it might just drive without us, so that's okay. But I'm more comfortable in this create a nice top wick first. Okay, that's pretty good. So potentially on the flip of this current candle, the stops are 20 pips. And to the bottom of the range, risking 2% and immediately going into break even once we're activated. Okay, it didn't push. It pushed too quick. Damn. Okay, pause. Hold on. This is moving much faster than the market. So let's secure. Let's go break even. We're break even now. Let's secure 50% of our position. So now it's risk-free. We secure 50%. Let's see if it drives. And we potentially have another entry in 15 simulation minutes. Okay, it's driving some more. Let's just close the full position because I don't like that it didn't just break. Awesome. And now let's just see how it plays out again. We got a 3, 2, 1, 30-minute closure. Okay, beautiful. Let's see what's happening here. Might get a support form. Let's see, because this is bouncing off that daily zone. So potentially price could drive back up momentarily. No bottom wick. Okay. It's 8 a.m. It's breaking the high, could continue driving up. Get a closure below here. Okay, let's see. Let's just see what we've accomplished today, how we conquered the day. 1 second. And I think we're done for today, for that day. So we made 2.2% that day. I think we're done. No need to overtrade. So let's go to the next day. This is Wednesday. So now let's go to Thursday. I think it's going to continue driving up though. Let's see. We don't want to overtrade though. Let's see. Before we go to Thursday. There's a closure above here. More buys. But whatever. Let's go to the next day. We don't want to overtrade. It is about a 6 a.m. pre-New York. 6. Okay, let's go to the 30-minute. 6:30. Awesome. Now we have to do another analysis. It's Thursday. Looking at the top here, you see it's Thursday. Today, only 2 days left in the market. Had a beautiful week. We can actually risk less. So let's clear the charts. Again, analysis. Anybody want to tell me what we're going to do first? One person can unmute.
Higher time frame,
Okay, which time frame?
daily or 4 hour.
So daily first. Okay, what do we see here? We see that we got this support right here, correct? We also see that yesterday's daily candle formed support because it closed bullish. So today, if it breaks this high, continue driving up to retest here or potentially here, correct? So from the daily, in this scenario, it's giving us some sort of direction, right? So let's go over to the 4-hour. All right, the 4-hour is also bullish. So the daily is bullish and the 4-hour is bullish, but we got this 4-hour resistance right here. So we need this 4-hour to close if it wants to continue driving up. We got another 4-hour resistance right here, right? Daily is bullish, 4-hour is bullish. Looking at the 1-hour. We got this 1-hour resistance right up here. And we got this 1-hour resistance that it was already broken right here. And now looking at the 30-minute. Looking at the 30-minute, price partially closed, but we got another 30-minute resistance right here, which is much better to observe. So potential, our bias now, potential buys. We get a closure above here. We can take this one all the way up about 25 pips to this resistance right here. So let's start. Let's see. Rejected. We could potentially have sales below here because we got clean traffic right here down to here. But the daily is bullish, the 4-hour is bullish, so we have to wait and see. The 1-hour was not yet bullish, right? Okay. Okay, we got a 1-hour closure. 7 a.m. Okay, beautiful. Oh, might have some, that might have been news. But closure above here, much stronger idea now. We got 3, 2, 1. Okay, so we got a closure above here. It broke these wicks to the left. We still got this wick here, and then we still got this rejection here. So actually, we want to look for buys above here. Just got to be patient, because if you look at this range, it's nice 20 pips. But the thing is, it's going to come to this rejection. So if we get a closure above here, we got this range for about 47 pips. So even much better. So just be patient. It's only 7:30. And she drove up. Rejected. 15 simulation minutes to a 1-hour closure. Okay. We got about 12 simulation minutes to a 1-hour closure. Let's look to the left. We got all of this range up here that price could come up to. So it's beautiful buys, actually. Beautiful buys. We need a closure above here. Ah, we're going to get it. Are we going to get it? We got 10. But if it moves too far away from the zone, then we got to wait. 3, 2. Okay, we didn't get the closure above. We didn't get a closure above. It respected this resistance. So we got to wait. Either wait for a support form, then take the impulse, or we wait for a closure above. But this next one might just drive. But I'll show you how we have a potential entry. Okay. I want to take a low risk. If price can break here, stop loss will be here. TP somewhere up here. Risking only 0.5%. So it's very low risk instead of our 2%. Okay, we're activated. We just got activated. Now we want to go break even right away. So now it's risk-free. We have the option to take some profits off the table if you want at this point, or you can just let it run. But a closure above here for a 30-minute, we got another entry then. I didn't take any, okay, so I didn't take anything off, but I didn't lose anything either. But it got stopped out. We got about, beautiful, rejecting. 30-minute closure. We can get a support formed, potential buys on a break of the high. She's going to reject and come back down. That's also okay. We got a 1 hour closure and a 4 hour closure in about 5, 2, 1 now. Okay, so let's look at the 4 hour. It's 9 a.m. Look at this. This 4 hour close above here. So this 4 hour here continue to drive up to fill this wick. So let's see the 1 hour close back into this range. So this could continue to drive down as well. And then the 30-minute, which closed back into this range. So let's see. I'm very interested in these sales because we know something called a range fill, and there's just a lot of volume. But I'm not going to take a position just yet. I'm going to put this here. This would be our stop loss. Our TP would be down at the bottom of this range because this move could fill this whole range if it comes back down. But we got to wait first. I'm not even going to put a position yet. We got to wait and see. I want to see how it moves. For our top wick. Wow, okay. So now we're going to place an order. We're going to risk I'm pretty confident with this. But let's look at the 4 hour. I'm going to risk 2%, but let's look at the 4 hour first. So that's the 4 hour top wick. This is the 4 hour resistance and rejections. This could continue to drive. I'm going to immediately go break even if we get activated. Ah, we got activated, but I don't like how we got activated. Damn. That's okay. Let's play it. We got activated and we lost that. So we lost 2% on that. I don't like so let me explain why I didn't like that. The reason I don't like how we got activated is because this rejected and it closed weak bearish back into this range also. And then this next one came down first to activate us. I wanted to create a top wick first, but that's okay. Let's take a look and observe what's going on here. It is 9:41. I think there might have been some news this day. We get a closure above here, central buys. 4, 3, 2, 1. Oh, it's just, we didn't even have a chance. Okay, but that loss was too big, so we're good for today. Let's go down to the next day. Six a.m. Oh shit, I went too far. Sorry. I went too far. It's okay. So let's go to Monday then. Because the market's already moving. Oh, actually, it's only 9. It's okay. We can check it out. Let's see. Look at the daily. So yesterday closed above this range. this resistance. We still got this support right here. The previous day closed above this daily resistance right here. We got another daily resistance right up here. Let's look at the 4-hour. Current daily is weak bearish. Excuse me. Current daily is weak bearish. 4-hour is also weak bearish with this 4-hour previous candle being bullish. Look at the 1-hour. 1-hour is bearish. Look at the 30-minute. Yeah, it looks about right. So I'm gonna say a 30-minute support like right here. And let's see how the market runs. It's 9. It's already 9. Support right here. I mean, resistance right here. Thirty-minute closure in 5, 4, 3, 2. Okay, so check this out. We need to look to the left. So if price does close above, we got potential buys up to here. And looking further left, potentially all the way up to here. Ten simulation minutes for a closure. If it closes near this resistance, this zone, I'm interested. But if it closes away, then we need a closure above here for buys. I was just moving. And now we need to look at the time as well. Might be able to get a 10:30 position if it closes somewhere like this. But if it closes up here, there's no positions. So cool. We didn't get positions, so let's just go to Monday for one more trading day. Actually, I only want to trade this week. I think the day before we overtraded as well. So let's see what we did. We came out profitable for the week. But for this one trade, we didn't take anything off. And for this one, we got entered too early. And that's my fault. So let's do analytics. Okay. So we had 7 trades, 5 were winners, 2 were losers. We had a 71% win rate. We lost a trade that we didn't need to lose at all. And we had a trade where we didn't secure profits, or we could have secured profits. So we could have potentially had a higher win rate. And that's the whole purpose of these live simulations, right? When you take some nice percentage away from the market, it's always good to consider how much risk you want to do. So there's times where maybe I should have risked only 0.5%. There was one time, that was that last trade that we lost. But overall, came out profitable for the week, 2.4%. That's almost 2,500 for the week. We would have came out with almost, I think, almost 4,500 for the week if we didn't take that one loss. Yeah. Awesome. Any questions?
Nah, was a good week.
Okay. Anybody else? Any questions? Okay, sweet. So I believe yes, on Tuesday, we have our first live trading. That's going to be in the evening around 6:30. I think it's safer to maybe arrive around 6:15 so we can do an analysis and then see if there's any opportunities. But I think maybe 6:30 is fine also. We'll see. I'll send out the link and then if you're available. So we'll have our first live trading session on Tuesday, which is, what is this? Which is the 9th, May 9th. Sweet. So thanks for joining me today. If any other questions come to mind in the meantime, just reach out to me and let me know. And then I believe I should be able to upload this recording to the mentorship playlist on the YouTube channel. I'll share a link to that as well.
All right.
All right, sweet. Thank you. See you guys soon.
Yes. See you soon.